Good morning. This is the video newsletter for buysellshort.com for Sunday, November 16th. Wow, last few minutes on Friday, just robots took over yet again. Huge sell program ended up down 300 on the day from actually being up at the highs of the session. We actually, before coming into the last 30 minutes of the day, had a breakout finally of this bullish falling wedge resistance at 8,800, and then the hedge funds robots just come in and slam the market into the close all the way back down to the 50-day moving average. So we have the end of the hedge fund redemption window that was on Saturday. So hedge funds should know over the next few days, if they've got enough cash to pay off all the requests coming in for money. If they do, the bottom's in, and we should see a nice move over the next couple of months. Dow daily chart here, W formation still in play. Would be looking for 10 to 11K in January sometime if this formation comes to pass. One thing, as I mentioned in the update on Friday, that I really like is the volume candle that we saw on Thursday. Highest volume since the sell-off back in early October. Now, you will have a lot of people say, well, yes, a lot of that volume was sell volume on Thursday, so it really doesn't matter. Yeah, that's what happens when you see bottoms. You see very heavy selling onto a double bottom test and then a huge reversal green, which is exactly what we saw on Thursday. And then also, if you note the last rally, big rally that we had back in late October, we had a huge rally, then we had a sell-off, and then we slowly rallied another 600 points over the following week. And, we had the same thing here. We had a huge rally off a double bottom. We should have had a small sell-off on Friday except for the robots coming in late in the day and slamming the markets. And we've got options expiration this upcoming Friday, so perhaps the robots will go in sleep mode for the next few days and we can finally see a close. We'd be looking for a close over the 20-day exponential. That's at 89.51. We get a close above that, we're going to see 9,500 pretty damn fast. 95 to 9,600. You've got a triple top up here in the 96 to 9,700 area. Now we've got the 50-day moving average in this time frame as well to deal with. VIX still remains very high. We're at a 65 VIX, which means the market can move 650 plus points intraday. We need the VIX to come down, which means we need all these damn robots to fall asleep and stop jamming the market. Still, we're not going to stay up at a high VIX like this. We're going on 7 weeks now of a VIX over 45, which is getting a little long in the tooth. Once we see a break of the 50-day moving average on the VIX, it should be plunge city for the VIX, and we should start to see the market hold its rallies versus down 300, up 500, down 400, etc., etc. Put call ratio, not really any help on the market. NASDAQ bullish percent, which helped us call the top back during the summer. One thing to note on this is it's making higher lows, and it continues to build on its strength while the NASDAQ doesn't. So this is a bullish divergence that we're seeing on this chart. This is making higher lows and looking somewhat decent, and the NASDAQ continues to get beaten over the head. One thing to note before we saw this big splashdown in October, a NASDAQ bullish percent reading in the 20 area, you'd be loading up. So yes, this is not your usual market, but some of the indicators are looking pretty decent here. NASDAQ 15-minute chart, same old, 1590 would be a breakout on the comp. QQQs, breakout here on the Qs would be a break over or a close over the 20-day exponential, and that is at 3144 right now. SMH, similar. SMH just really got beat today or this past week. Intel came out, cut its revenue guidance for the quarter by $1 billion. It was ugly, but is it surprised? I mean, the global economy came to a standstill for an entire friggin' month. What do people expect? Did they expect, you know, retailers to continuing ordering product when they're not selling a damn thing? No, this is to be expected. Still, breakout 20-day exponential, you know, common theme with all these charts. So right now we'd be looking at 1950 to confirm a breakout on the SMH. So if you're looking to buy that, I would wait for a close above this area before I'd consider adding to, you know, new positions. You know, this is actually probably one of the first videos I've done in a long time where I really didn't even bother going looking at charts. I looked at you know, a few charts today and they're just ugly. And stocks in general are just ugly. So we're just sticking to ETFs. That's how we're going to play this rally. If the rally is real and actually holds more than a couple of days, there'll be plenty of time to move into stocks. So, you know, we're focusing on the DIA, SMH, QQQs for now. Bunch of other ETFs, you know, banking index, BKX, heard some talk about buying put options on the VIX. You know, we're expecting the VIX to come down, so that's another way to play this market. There are a couple of stocks I am going to mention. I mentioned them in the update on Friday, and those are STEM and ASTM. Stem cells have been on fire. Obama has been talking about it constantly over the last couple of weeks. So has, you know, the Democratic Congress. Stock got hammered this past week. They did a financing at $1.45, $20 million worth of shares. Stock got hammered back down, bounced nicely. We closed back above the 200-day moving average, which is bullish. And then in after hours, which should cause a nice spike in these stem stocks over the next few days, Pfizer came out and said that they're going to open up a stem cell division. So now, for the first time, we've got a large pharma moving into stem cells, and they said they're going to be doing collaborations, which means you're going to see news with STEM. These guys also have some more PR that's coming in the next few days. So let's stick to the hot momentum sector, which for right now are stem cells. Target here, when we added or sent the alert out on Thursday, was a buck 45 to 50. You know, we're going to shoot a little bit higher. This one's going back to the 8-day moving average. 165 to 180 plus is what I'm looking for over the next week if this momentum continues. And likewise, ASTM, we should see a move back up to the 65 to 70 cent area on this stock if the momentum continues. The other player in the field, GERN, GERN. You know, I prefer to stick to STEM and ASTM right now, only because I don't really like the stocks that are over, you know, $4. Actually, I don't like any stocks that are over $2 right now, because most stocks, if they're under $5, they're going to $2 and $1 right now. So, you know, let's stick with the momentum and the ETFs for now, and there'll be plenty of time to move back into stuff. We're still in some penny turds, but you know, they're in the basement. They can't really go any lower. So, you know, we'll just sit on those when the market does finally hold a rally, which will be soon. Stocks like that, like Zone ZHNE and NEOL and NEXM, etc., will bounce back nicely. So, for now, we came pretty damn close to breaking out on Friday, except for the robots coming in and ruining them today. But, you know, not to be, it wasn't unexpected, let's just say that. I mean, the size of the drop at the end from those stupid computer programs. But as I've noted before, that huge plunge we saw right at the close, typically the next day is an up day. So we should see a gap on Monday. And the key level to watch will be 87.26 to 89.51. So those are our two levels. We've got the 89.51, the 20-day exponential on the daily chart, and we've got the, you know, let's just say 8800 on the 15-minute chart. We get a close above this, and we're back up to our trading range. So market's still in a trading range. We're playing our ETFs, which should be easy 50 to 100% doubles, like the January calls, DIA 94 to 96 calls, and the QQQ January 32 calls as plays on a market bounce. And when they drop, we've got a couple of months. We can always average down. To give you an example, the DIA 96 calls on Thursday got as low as $1.46. On Friday, before that late day sell off, those same calls were $3.70. That's 200% gain in a day on options. So that's why we're just sticking to the ETFs right now, and we can move back into the stock plays as soon as they wake up. So that's it for the video. I'll see you guys in the chat room tomorrow.